Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, today we had the main risk event for the week was the FOMC, and finally we know what happened. The Federal Reserve cut the rate by 25 basis points. Initial reaction, the market was a little bit disappointed. I think not that much because of the 25th, because the 25th was like really well expected, but the rhetoric saying that basically the dot plot doesn't show any further cuts for this year. So I think the market was disappointed, and we started re-entering the previous balancing range below 29.91. However, that didn't follow through. We didn't get continuation towards the bottom of the range, and actually the rejection was, it moved up really fast when the time came. And actually, at the end of the day, we took the Tuesday's high, so we ended up with an outside bar on the daily time frame. Now, this was, the first, second proper test of the previous range, and closing up there, that leaves the possibility that this is daily excess, and confirmation of that excess will see us trading above tomorrow, and if that stays there and that excess holds, there's a pretty good chance that we are attempting to take the high from last week, and the final destination obviously would be the all-time highs, 30.32. Now on the monthly, we are pretty close to the top. We know that there's no meaningful excess there, but still it hasn't changed on the larger time frame. We're still within last week's range. But what we get from today's price action is there was a little bit of disappointment in the market, but that was quickly reversed, and there was a rejection from the 2970 something area, 2990 area, and we have the possibility of daily excess. If we look at the market profile, it's pretty much a zoom in of that daily bar. As you would expect, the morning was really muted, and it was through the FOMC. Well, before the FOMC, important to know that we had a poor high, two consecutive poor highs, the one from yesterday and the one from earlier today. And you also had a poor low on the HI low, and a poor low from Monday. So I did tweet it. I did tweet that the volatility could create a situation in which we traded at both sides, and that's exactly what happened. Note that when we spike after the announcement, it stopped right there at the highs, and I thought that was odd. But then the lows were retested, and we got further deep into the previous range high, or below the previous range high, 29.91. And then there was a real good attempt on the K period to go, and K extended like 3 times, but it only did this little bit of excess, and then we started going back. And then when the double distribution closed and we were back outside that range and back above 29.91, that was a pretty good indication that the downside was not strong, because you at that moment, yes, you had the 3 wide inside, but you had excess, and you closed a double distribution, which, it was half of the profile. So when that happened, that should alerted you, if you were short, that the downside was not as strong as initially. So we also probably had a little bit of a short squeeze towards the end, and basically we took the high, we took the week high. So what do we see for tomorrow? Well, now I think the focus is on assessing continuation from this late move. If we do start getting back below half back, I would say that's meaningful and that denotes change from the late session. However, if we get overlapping, like above half five, overlapping value and even take the high, that will confirm the daily excess, and I think that will increase the odds for further upside. Uh, as we always say, odds are just odds, anything can happen, so monitor your risk, keep your references in sight, and trade well. One last thing that I would like to mention is this is the last market briefing that I'm recording this week because I'm traveling Thursday and Friday, and I should be back over the weekend. And you will have the normal briefing preparation for Monday and next week on Sunday evening. Have a nice evening and trade well tomorrow.